Well, last week, Facebook's IPO dominated economic headlines.
That's right, but what exactly is the purpose of an IPO, and when is it best to buy stock? Here
to break it all down for us is 23 ABC's personal finance advisor, Andy Barkay. Good morning, Andy.
Good morning, folks.
Yeah, and this especially in the headlines now after it's starting to...
Not look so great.
What would we call it? Waver a bit? Sort of like the excitement has worn off? I mean, what are we looking at?
Well, it's just falling in value. It's trying to find a true valuation. When it came out last week at $38 a share, it went up to 45 immediately when the public could jump in, and then immediately came back down to 38. And I think people sat around over the weekend and figured out, what is this thing really worth, and do we want to hold the shares and wait? And in pre-market trading this morning, it's down to another $1 plus. So it's down in the 33.5 range this morning from 38. So not the most robust initial public offering we've seen in the past, but it was probably the one, like you said, that dominated the headlines for weeks. So.
All right, so where do we go from here? Obviously, regular folk like us can't buy it just yet.
Well, you can. Anybody can buy the stock as soon as it starts trading publicly, which is right after the IPO.
Okay.
Now, initially on the IPO, the lead underwriter, which I think was Morgan Stanley, will actually start calling their customers and selling the stock. That's their job, is to sell these shares. They're typically sold to bigger customers, other institutions.
Right. Big money.
Small folks like us will not get a hot offering like this.
Right.
So if you can get an offering, what I've already told clients in the past is you may not want it, because that means the big boys are kind of passing by it. They're walking by it and looking somewhere else. So you may not want those shares. So typically these institutions are buying these shares, and they can turn around and sell them. A lot of them did. But in a lot of cases, when employees and other insiders get these shares on the IPO, they've got to hold them for a period of sometimes 6 months to a year before they can sell them.
Okay.
All right. So waiting till it trades in the secondary market. But for somebody maybe that wanted to jump in on the initial public offering, I mean, how easy is it for someone like us to get in on that?
To get on the initial public offering, very difficult.
Okay.
Typically, now traditionally there's several types of offerings, but traditionally an IPO, again, is picked by a syndicate of brokerage firms whose job is to sell those shares. They're taking the shares and they're valuing it at a certain price, and they're guaranteeing Facebook that certain price, in this case $38 a share. They've got to sell these shares or they take the hit. So they're going to sell them to their customers. And they're going to sell them to their big customers. They're going to hand out favors and other big institutions. Typically, the public can start getting it right after it starts trading, which is usually, in some cases, just a few minutes after the IPO price is established and it hits the market. That's when the public can jump in. And we saw that because it drove the price up from 38 to 45. And then you saw some selling come back in. So that may have been some of the folks that got it on the IPO selling it off and taking their money and going home for the weekend.
Kind of like what Mark Zuckerberg did, right? He took his $19 billion.
Well, he more than likely got some cash out of the deal, but more than likely he's still holding a large amount of shares, and those shares were valued at that $19 billion. On Friday, they were valued at $19 billion. There's somewhat less than that now, so he's still
rich. Still
in the bees.
He's going to be
still in the bees.
He's still going to be able to buy dinner. Yes.
Yeah. All right, Andy Barkay.
Thank you so much for coming down
Thank
here
you.
this morning.
Appreciate it.